sabayin. I don't know.
Futurist Conference Virtual 2020. I'm coming to you guys from the Futurist Central studio, and we got three lovely guests here today, and we're going to discuss the evolution of blockchain with the evolution of real estate through blockchain technology. I think this is actually one of the hottest topics, and one of the first things I thought blockchain could really revolutionize. So let's introduce our panelists. You're going to introduce yourself and tell us a little bit about yourself, starting with yourself, Lily.
Hey guys, nice to be here. Thank you so much for having me. So my name is Lily Dash. I'm the co-founder and CEO of Rexy. And Rexy is a real estate and infrastructure syndication platform. So we crowdfunding platform. We're using blockchain technology to fractionalize these assets, especially right here in the Caribbean. I'm from Barbados. So solar farms, hospitality projects, desalination plants that we're democratizing.
Amazing. So we got our Caribbean representative.
Yeah.
Thomas?
Hi, my name is Thomas. I'm the co-founder of Rexy and also the CEO. We're based here out of Vancouver. I've been a realtor for the past 17 years. Own a small boutique real estate office here, and we've done somewhat similar to what Lily has done. Built a platform allowing to fractionalize real estate investments, and now allow people to invest into income-producing properties to create a dividend and also share in the appreciation. So we're doing that for about 2.5 years, and we're just launching very, very soon here, and really excited to be on your booth there.
Amazing. Enrique?
Yes, hi. I am Enrique Suarez. I am the co-founder and CEO of Mountex Real Estate Capital. We are an international crowdfunding real estate platform dedicated to opening inaccessible and complex real estate to anybody, anywhere, anytime. We have 20 years of experience investing in Mexico, the US, and Canada, and now we want to give access to everyone so they can create wealth.
That's amazing. This is a really exciting panel in the sense that, Futures is truly a global conference, but this year we're actually globally meeting up. Everyone is in a different country, a different part of the world, and the miles couldn't get any further, but I feel so close to you guys. So let's just kick it off. First question I have for you guys is, real estate is one of the oldest industries in the world. A lot of people say it's like an elephant; it just doesn't move fast enough. But with the introduction of blockchain technology, where do you see what part of real estate is going to be impacted the most, and why? So take it away if everyone wants to take that one.
I can go. I think blockchain technology is going to impact a lot of the process of real estate. We're going to see in the future how every step of the process of real estate is going to be affected. The searching of the property, having the due diligence for investing or for buying, having the proof of ownership, and of course, the financing, when that's part of the tokenization that we're talking about. And not just there, but we're going to get liquidity to real estate that opens a whole new gameplay. It's a totally different, because until now real estate has been on liquidity or on liquid. So it's very hard to transact with real estate or complex. And now we're going to see how that starts changing, and that gives also a new value to real estate.
Yeah, no, interesting. Go ahead, Thomas.
I was going to just say I agree with Enrique, but I think what's important as well is that now people are going to be able to participate. Retail investors, I've been in real estate for some time. There's so many people that have wanted to buy real estate but have not been able to because of the high cost of capital. And so having maybe possibly bad credit, no credit, not long time in the job, and having a little bit of money and wanting to invest in real estate is aspirational. Everybody wants it, but not everybody can afford it.
Right.
Now being able to fractionalize that and open it up to a global pool of new investors, I think that's going to definitely change the game in the real estate market over the next few years.
Definitely.
Yeah. I think back to liquidity. Like I'm a real estate lawyer by profession, and one of the reasons why there's so little liquidity in real estate is because it's such a cumbersome process to secure when you can digitize it, and suddenly thousands of people can access that. We're able to get more efficient price discovery. We're able to do more transactions per year, more transactions per day, that just traditionally wouldn't be able to. So it's a total game changer in terms of the market and revolutionizing that.
Yeah, no, I agree with you guys. Actually, Enrique hit on something really interesting. With real estate comes a lot of trust, right? A lot of archaic systems. Every country has different titles and different title holders and way of managing that data. Are any of you guys in any of the countries you're really focused on really solving that with blockchain technology at all?
I've seen a couple of companies that are working on the titles and the ownership of the real estate. But I think it's also part of the regulation. It's such a huge market that governments, especially governments, they don't want to open up because right now they control like the title industry, or especially in Mexico and Latin America. So when we start having a decentralized company, or when you have the titles on blockchain, and the notaries, the escrows, a lot of things are going to change in the process. But I think we are moving there. It's going to be a slow process, but I think we're good together where you can do a change of ownership on blockchain and on a platform.
Yeah, I agree. One of the things I've always been thinking about, especially with being in blockchain for so long, and also being in real estate for a very long time, is that we are so interconnected nowadays, but real estate is so localized. Like what Thomas sees in Vancouver and what I see in Toronto, even though we're in Canada, the market's completely different, right? How do you guys think that this blockchain technology can actually change localized markets?
Well, I think that it's going to change the face of investors, and we're looking at it from the investor standpoint. We're seeing that they're the ones that are actually being able to get into the market, being able to capitalize on the market. And retail investors now having the ability and taking a global pool of capital, I think that the real estate markets are going to get floated just because there's just going to be so many more investors coming into different markets. And I think that will come with adoption, and that will take some time. Vancouver and Toronto have implemented foreign buyers taxes, 30% premium in Vancouver. I think it's still 20 in Toronto. But what you're going to start to see is other markets where they don't have that. You're going to see more investors coming into those markets and actually getting dividends and actually getting appreciation. So I do think it's going to take some time, but it's going to be all about adoption.
Yeah, that's interesting. I mean, I just want to dive a little bit deeper into that. Like you said, markets like Canada, Toronto, Vancouver have these foreign taxes because it's impacted in a certain way. When will countries start using foreign investment and actually using that blockchain technology to manage that foreign investment that's coming in? Do you guys see a time? Because some countries are looking at it as the localized market can't afford it, but other countries are trying to bring this foreign investment there. How do you think blockchain can help with that?
So I think the issue is usually that foreign owners own too many assets in local markets. So we need mechanisms that encourage domestic private investments alongside the foreign investments. Like we can definitely see that there is value in having both, and we definitely need to enfranchise more domestic markets. The problem is by the time you get to that point where there's foreign investors flooding in, margin of difference in terms of the price per square foot. So we need the foreign investors. We can list a percentage of their domestic asset on a domestic exchange, like a blockchain exchange, where a domestic investor can take a stake, right? So they're properly included in this ecosystem, which is not happening at the moment. Like we see places like Vancouver, which is practically owned by foreign investors. Similarly with Toronto. So we need to figure out how we can enfranchise and include everyone, and that comes from fractionalizing, being able to get people on the ladder at a much smaller entry rate.
And I want to add on that. I totally agree with Willie and Thomas, and also opening for new investors that doesn't have even access, and not just for the international or the domestic part, but opening to people that are not included right now in the financial system. So there's a lot of people that are not even, and that's part of blockchain and decentralized finance. That there's a lot of people that doesn't have access right now, and with fractionalized and with platform and technology, we can open this new market that they don't even think in investing in real estate right now because they can't.
No, I agree, and I find that within real estate, just being such a massive industry, as well as one of the oldest industries, they're actually the least to adopt technology. Because even if you're seeing today, you're seeing a lot of fintech companies, not necessarily blockchain yet. They're properly and somewhat open door. They're getting massive valuations and massive funding coming in. So you can see technology is coming into the whole game. The question I had more around even right now is looking at our looking at our current environment. I don't know if you guys know, there's a global pandemic happening right now, but COVID-19 really obviously has changed everything in the world. But how has it really impacted real estate and technology within that? And what have you guys noticed so far?
I think it has. We need to divide the question in two. I think the real estate is going to have a new trend. Of course, COVID has shown a lot of people that they don't have to live in downtown. They can work remotely. We have all used all this technology to be together, even though we are miles away. And this is going to change the real estate purpose itself. And then opening up to technology, also I think COVID has helped us accelerate the adoption of technology, like, I don't know, maybe 10 years into the future. And that opens the market for this new technology and new investing, and be open to not just invest in your local city, but start looking into new opportunities, worldwide.
Yeah, we work with a couple companies, and basically they would send out their sales reps before pre-COVID to meet all their clients to get all their documentation. And I think that with COVID, it's actually excelled that. They couldn't work over the lockdowns, and now a lot of these companies are looking that they need to digitally transform their business and adapt to the new world. What Enrique was mentioning is that a lot of people that are working from home, that were living close to work, sacrificing living in smaller spaces to be closer to work, now see that they can work from home, and companies are now seeing that working from home is very efficient, saves them a lot of money on those big bloated leases that they have in those spaces, in those buildings. Now these people are actually saying, I can work from home. I'm going to start selling my small one bedroom in downtown, let's say Vancouver, and start moving in to suburbs because of the fact that they don't have to go to work. So we're seeing that right now, that exodus of people leaving the downtown cores and going into the rural areas is happening, and it's actually been accelerated. This probably wouldn't have happened if COVID wasn't as didn't come as quick and furious as it has.
Yeah, the market has changed so much. So we're seeing a great demand for the lit place, for the really great places that people want to be. Like, people want to be in Malibu, people want to be in Tulum, people want to be in Barbados, but there's just not the capacity in those places, right? Those places need a building boom now, right? We need to syndicate capital, build out projects so that more people can go and live there sustainably. Communities need to be built. So being able to invest online in places where you aren't there necessarily, but you're able to impact and make a difference, and also make ROI quickly and efficiently.
Yeah, and I think you hit it on the head there, Lily. It's syndication, and where it begins with real estate is always capital, and how do you put that together? How do you guys think? And I know a lot of two of your projects right now really deal with this, and where do you think the evolution of that crowdfunding and syndication of funds for hard assets is going?
I think it's evolving. It's also it's very close to regulation, and regulation. It's been evolving. The U.S. just announced new rules for the crowdfunding, they hire the amount you can raise. So I think all the governments are looking into this new way of investing, and I think that's going to also open the market, because in the end, real estate is such a huge market and is such a huge part of the wealth and of the assets of every people that government has to regulate it, and it has to be regulated the right way, giving access to everyone. So I think we're going to see more regulation, and people is adopting it, and it's going to be a safe way to invest anywhere.
I think that we just have to be very careful as to what we're opening up, because we're opening up to the retail investor, allowing to invest into properties, whether it be infrastructure or real estate or any sort of asset. However, there's so many bad actors out there that we have to make sure that the assets that we bring onto the market are very important, because if we want mass adoption, we want people to actually see that they're getting a benefit from the investment they're getting into. And so I think that with more crowdfunding platforms, with more adoption, with more positive projects that actually give great returns, I think it's going to be very important for those investors to be able to say that they have built that trust, and now that they'll want to go into other investments as well.
Yeah, no, I definitely agree, and I think that in Canada where we are, home ownership is somewhere between 70%, 70 or 80%. It's quite high across the world, but when you look at some of the other countries around the world, that's much lower, and it seems like it's dominated by the haves and have-nots. Democratization of real estate is something that came up really early in the blockchain space, and what does that really mean? Can you explain to our audience what does that actually mean, and how is that solving things?
Okay, so democratization of real estate. I mean, in the past, if we go back in history, only the kings and the aristocrats could afford real estate. Like literally, it was crown land. In law, in at least the Commonwealth, crown land, and basically everything was crown land. And then we were able to subdivide, and we were able to get a piece, and then mortgages came, and we were able to get finance, and it was passed down. But really and truly now, we see from the large projects, the generational wealth projects, those ones that actually can bring you in more than a 3% cap rate. 3% cap rate is what residential real estate gets typically globally, whether that's in Boston or it's very low, right? You're not going to become wealthy off of buying a residential property in 10 years' time. It's very unlikely. But if we look at large public development, there's a lot larger returns and larger cap rates to be gained from that, and those gains and those returns pass down to the small investor who's only able to invest $5,000 or $10,000 or 50,000, whatever it is. I'm talking cap rates like 20%, right? Like
right.
in Barbados right now, we have an opportunity where if you invest in a solar farm now, we have mandated structural returns that are 20-25%, right? Which are unprecedented,
Right.
and they're a bit local, right? But in order to build a solar farm, you need a few $1 million. So democratizing is being able to say, okay, every citizen can be enfranchised and have access to this opportunity.
I also think democratization of real estate is going to help develop new cities and grow new cities, because right now we're talking, there's these huge cities that are growing and that real estate had been booming, but opening it to the market, people can invest in their own city. Maybe you are talking about a small city, I don't know, in the middle of a Latin American country or in the middle of the US that it hasn't grown. But now opening to new ways of financing, you can start building wealth over there, and the wealth is going to go to all the community, not just to the investors. So it's really a matter of not just the developers looking to get the best project, but also the community itself can finance the growth of the medium and small cities, and that will generate wealth for everyone.
Right, that's really interesting. I really like the point there, infrastructure projects and the regular investor really getting into that. I think that's not top of mind. Like when you look at, I guess my local market, Toronto, there's a crane on every corner. Everyone and their uncle talks about real estate, and everyone says, "Oh, I made X amount on this last condo I bought." So everyone on earth is rushing in, rushing in, rushing in. But with COVID-19, we're actually seeing a big reversal of that trend right now, where the condo market is actually slowly going down. And like Enrique said before, many of the outskirts cities of the metropolitan, the prices are going up tremendously, and that's really happening because of COVID-19 and the trends that we're seeing. Um, I'd like to better understand, with the infrastructure projects, Lily, somewhere like Barbados, are they out there right now in the world uh, trying to find investors for these, or are they really pushing this to the domestic audiences?
Yeah, so no, I mean, of course, we're trying to, or we have a very progressive government, we have a very progressive prime minister, and her mandate is to protect those domestic Barbadians and give them access to these opportunities. Of course, with 25% cap rate, we can get any hedge fund in the world or any fund in the world to invest in us, right? We only need 250 megawatts of energy. There's not that much in terms of demand. So yes, we need ways to, and we're working on this right now in order to get the public involved in these deals.
Nice. Maybe I was just asking for myself. I'm kidding. With 25% cap rate. No, that's a really great answer. One of the good questions that came up from the audience, I just want to ask you guys, is that really, what local feedback do you anticipate when you open up global investments in the housing price market? That's a local market. Like, what do you think is going to happen?
Are you talking about global pool of capital coming into local markets?
Correct. And what kind of feedback do you anticipate? This is a question from the audience.
Well, I do think that right now, because we're still, I would say, at our infancy stage, until we get mass adoption, but again, it's a supply and demand issue. If we're in a country or a city that has lots of supply, little demand, obviously, we're in a different position. But when you have like major city centers like, let's say, Los Angeles, New York, or any of these major metropolitan cities in North America, when you have lots of demand, then basically prices are going to be driven up. And so I do think that, like I mentioned, is that we actually open up a global pool of capital coming into these markets. We can actually see and have a negative effect on these big markets because of the fact that now we have so much investors coming in. We just have to be very careful and be very mindful of how we can change markets. And I do think that other markets in other countries, third world countries, you'll see that that demand will be pent up as well, and you'll see that people that are living in these regions basically just want to invest into their own country. So again, just adding in more funds into those markets will just drive up the markets as well.
And I think I agree with Thomas, but we are in the infancy, so when we have more absorption or more people into this, and also the technology is on the market. Right now, everybody wants to be on these huge cities because the demand, it's not meant by the offer. There's more or is limited offer and a huge demand. So because it's also very complex to enter into real estate, you have to have all the documents and everything you have to have. But when we have this technology and we have liquidity, also the process of buying into a city is going to be a lot easier. So pricings, they are going to adapt. So I think in the future this bubble is not going to be that high. In the beginning, it's going because a lot of capital is going to come to the cities, but in the end, it's going to regulate depending on the absorption that the technology has in the markets.
Right. One of the things that we heard earlier in Futures today, I guess it was yesterday, was really around the security tokens. A lot of real estate will end up being on that security token spectrum. Where do you think regulation has really gone with that? I mean, I guess we're looking at 3 different countries, but kind of given your experience when you're trying to build a blockchain startup, how have you dealt with the security token regulation?
Okay. Thank you, Thomas. In Mexico, we are just starting with the fintech law. I think we are are still in a very early stage, and in Latin America, there's a lot of countries that they don't even have regulation. For us, we are going to tokenize in the US. We decided to go in the US because of the regulation they have. Because as Thomas was saying, we're looking into build a product that it's secure and the product itself, and then of course the real estate project itself. So people can really start trusting and investing. And right now the US has the more advanced regulation and it's more open to do business. Of course, there are countries and other regulations that are working on it, but I think eventually we're going to be looking into more countries that open up and get the best practice, the countries that are right now leading the regulation of securities.
I agree. I think that for us as a company, we have to look at the current securities regulations. When we first came up with the idea, we wanted to democratize real estate investing just like everybody else. However, we knew that we were selling, well, we quickly found out we were selling a security. We were selling shares within a corporation that owns the asset. So we had to build up a compliance engine to make sure that we're compliant with all provinces and states in Canada, and then also the SEC in the United States, is to protect the retail investors because that's ultimately what they want to do. They don't care about the accrediteds. The accrediteds are, they already know what they're getting into. However, it's the retail investors that these security regulations need to protect. And so we wanted to make sure that we were in line with security regulations in Canada and the United States, and we understood that it was going to take them a long time to look at security tokens and say, oh, this is where we want to go eventually. So what we did is that we just made sure that everything was in line with their rule sets and we followed their guidelines. And so when they want to adapt or when they shift and they adapt to that market, we adapt with them. Instead of trying to change the entire market, try to change their thinking, try to do everything on their end and hit a brick wall. So we're following what the security regulations are in those two major markets. For us, that's where we're concentrating, and that's what we feel as though that a lot of people want to invest into these markets. So primarily just Canada and the United States is what we're following right now.
I think I think the regulators are less concerned about the technology, and they don't mind what kind of technology you're using, whether it's blockchain or not. What they do, they want to make sure that we're protecting the consumer against systemic risk. They want to make sure that all the KYC is done and the compliance engine is working in accordance to every single schedule in the regulations, and that ultimately that the investors are protected and that no one's investing more than they can afford to lose. So, and that's what they're hard and fast on more than anything else.
Right. That's interesting to say. What they can more than can lose. It feels like real estate always has this aura of nobody can lose. But it's like any trading markets. Always someone's winning and someone's losing. Maybe they're not. Maybe they're meeting in the middle. But at the same time, I love to hear that that the regulators are really worried about protecting those massive losses that retail investors could incur. So they need to know what they're getting themselves into. We're going to go into our big question of the day. We're doing this with all of our futurists, which is you guys. So the question we have for every of our massive speakers is that what will the future look like by 2021 Futures Conference? Very short term, but long term view. We want to hear it. So we'll start with you, Lily.
Okay, so I think the price of Bitcoin is going to be stable around $21,000. I think we're going to see, I think it's bright. I think that this time next summer we'll be all out and over with COVID, and our technologies will be motoring along, have more access. We're going to see more and more amazing projects and sustainable projects happening, and more funding in the DeFi space will be from 13.5 billion assets under management today to 130 billion dollars.
Whoa!
Yeah.
10x, 20x? Okay.
10x.
Where do I send my money? Please let me. That's awesome. Great prediction. Okay, 21,000, 10x on DeFi. Meyer buying into a solar farm in Barbados, it seems like so far. Okay, what do you got, Thomas?
Well, I think that
Awesome. Enrique.
Yes, I think we're going to see in this next year technology adapted to our daily lives. I think this year is going to be the one that we more start seeing technology and new companies and new projects into our daily lives. We also are going to see a lot more accessibility, financial inclusion, and innovation. And for this, we're very excited because we want to make a big announcement. Last week, we tokenized the first real estate in Mexico, and we sold the tokens to private investors. So we're very, very excited. We're working on opening the market. If you can go to our website and see our case study for this historic, transaction that we just closed. But it's going to be everything about accessibility, financial inclusion, and innovation.
Wow, bravo! That's amazing. Congratulations for doing that. Definitely, I wanted everybody to go check that out. The case study. It's in the app. Go check out Mount X's virtual booth, and it's all there. But I just wanted to thank everybody for joining us today. We've had an amazing panel discussion, and look forward to seeing if your predictions come true. Take care.
Thank you. Thank you, guys.
Bye.